Hello traders, my name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report where we will look for decent trading occasions. We'll try to find the best trading setups on the market. First, before we will analyze the charts, we need to check what is the situation in the calendar, because you never should start trading. You never should open any positions if you don't know what is going to happen from the fundamental point of view. Because, for example, you can find the best trading setup, which looks like the sweetest deal in the world, and you will open this position, but in the next hour you will have a data about something about interest rates or inflation, and this data will trigger a strong reaction on the market opposite to the technical signal, and you will be basically screwed. So what is going to happen today? Not much. We will have only data important for the New Zealand dollar, so GDT price index. Other than that, we already had important data. As you can see, PMIs from Eurozone, which came better than expectations, and this is supporting Euro, at least on the pair with dollar, not with other currencies. Overnight, we had statement and trade decision from the Bank of Australia, and I will show you how Australian dollar reacted on this. Because there was no change, right? We are expecting the interest rate to remain 1.5, and we got 1.52. If you plan to open a position today, keep in mind that overnight we will have a data important for the New Zealand dollar. So data from the job market, employment change, unemployment rate, and tomorrow also, but later, almost 24 hours later, we will have data about interest rate and about the statement policy, monetary policy statement, rate statement from Reserve Bank of New Zealand. So also important for the New Zealand dollar. So we can say that Tuesday and Wednesday is important for the New Zealand dollar. With that being said, let's look at the charts, and we start with the euro dollar. As it is our first daily analytical report this week, we will do the fresh analysis of the instruments. So I start only with three instruments, those taken from the Trading Sniper video, which was published half an hour ago. And on Trading Sniper video, I discussed euro dollar, euro to New Zealand dollar, and oil, WTI. And on euro dollar, what you can see here is an inverse shoulder pattern. So we have a left shoulder here, we have a head, and we have a right shoulder. What is this? Is a false breakout above the horizontal resistance. But I still consider this horizontal resistance as a neckline. I do not consider this line as a neckline. I think that blue line will be more important, especially that if and when we will break the blue line, it will mean that we will break the midterm downtrend line too, which is this red line here. So the breakout of the red line, the breakout of the blue line will give us a buy signal. So price closing a day on the checkpoint will be a buy signal for the euro dollar. This is my current opinion about this instrument, because here we can also see this long-term horizontal support. So we have a chances for double bottom formation and a further upswing. As I said, we can see a positive setup on euro to American dollar, but on euro to New Zealand dollar, not so much. On euro to New Zealand dollar, the situation looks quite negative. So what we are seeing here is a rectangle. Rectangle is a trend continuation pattern, and the trend here is negative. That is the situation on hourly chart, and it's pretty clean. So downswing, flag, downswing, flag, downswing, rectangle, downswing. On the long term, this relation is negative too. So what is happening here is the price is breaking the long-term uptrend line here. The price is also additionally breaking the midterm horizontal support here. That was an important support in July and the beginning of August. All that drop is triggered by the double top formation here. First top, second top, and a breakout of the horizontal support. So we have the breakout of the horizontal support. The price aims long-term uptrend line. We don't have a bounce, we have a breakout. We have a breakout of the uptrend line and a horizontal support. And then the price creates a rectangle, and this rectangle does not is not finished yet. We have to wait for the breakout. So breakout to the downside, breakout of the lower line seems more probable and will open us a way towards new lows. But breakout to the upside, okay, it is possible. The probability is maybe lower, but it's still possible, and we can, if this one will happen, we will get a buy signal at least towards the orange area here. But in general, the long-term sentiment on euro to New Zealand dollar is negative. Now oil. Oil looks super awesome from the technical point of view. So on oil, we do have a long-term downtrend. The price, midterm downtrend. The price is making lower lows and lower highs since the beginning of October. So October is pretty bad for the oil. We do have a correction, then there is a pennant, drop, trend reversal pattern, drop, pennant, which is a trend continuation pattern, drop, rectangle, drop, flag, drop, smaller correction, drop, flag, drop. This is main downtrend line, this red one, and the thing is that as long as we stay below the red line, the sentiment is definitely negative. In the long term, as you can see, a long time ago, well, a few days, a week, 2 weeks ago, we broke the long-term uptrend line. And also here, you can see that at the beginning of the month, we broke the horizontal support. Support which was important in June and August. Also, the price is now breaking the 38.2 Fibonacci here. So yesterday we had a bounce from the horizontal resistance and we had a breakout of the 38.2. All this brings us a negative sentiment. Well, maybe not brings us, but confirms us a negative sentiment. What we are having here right now is a triple top formation. 1, 2, 3. Triple top formation on the long-term chart means that the price can drop to levels as low as $40 for 1 barrel. Those 3 instruments I mentioned on the trading sniper video. Let's move to instruments which were not mentioned there, and let's analyze instruments from the scratch, that you can see how this decision-making process looks like. This is Australian dollar to Canadian dollar. On a daily chart we have a downtrend correction, and this reversal looks pretty strong. Downtrend line was broken, right? Definitely downtrend line was broken. This is this downtrend line. Let's check the Fibos. 38.2 was broken. It was later used as a resistance, as a support. There is this horizontal area, and in my opinion, we can get there to this horizontal resistance here. But the price is so high that it's not my style of trading. There was a chance to buy here. Now it's gone because the price is just simply too high. Euro to Swiss franc. As you can see, I was I wanted to tell you that I will show you the reaction on the statement, and as you can see, this is pretty bullish reaction on the statement. Obviously it was published a few hours ago, but traders need to digest information. Also, I forgot to tell you about one fundamental event that happened 10 hours ago, more or less 9 hours ago. We got information from UK Times. The UK Times announced that European Union will offer border compromise and Brexit for Theresa May. European Union indicated that they are prepared to offer an independent mechanism by which Britain could end temporary customs agreement. This was provided by the Times, and I will show you later the reaction on this on the British pound. Now Australian dollar to Swiss franc. Here we are aiming an important resistance, and we are aiming this resistance here. What is interesting is that we already tested that with this hourly, with this daily shooting star. The thing is that the shooting star did not cause any bigger reversal. Now the price tries to test that for the second time. What I would like to show is the possibility of a reversal. So the price bouncing from this and breaking the red line will be an invitation to go short. But chances for that are rather limited, because that shows us a huge bullish sentiment here, and this denial of the shooting star looks dangerous. Looks dangerous for the sellers. Let's leave it and see where it goes. Next instrument is Australian dollar to Japanese yen, where we're also trying to create a double top formation. The place where we are doing that is not random, it's a long-term downtrend line. So we had this bounce. In theory, what we should get is a double top formation, so a bounce and then a breakout. But it's not happening. Or we should get a breakout straight away, but it's not happening. The price is pushing higher, and we have a quite big chances for a breakout. The first natural target for this will be here. That will be a long-term target. What is interesting here and definitely worth considering is the fact that the swaps are positive here. So going long on this pair looks promising from the carry trading point of view. Australian dollar to New Zealand dollar. Here we are still under the influence of this neckline of the head and shoulder formation, left shoulder, head and right shoulder breakout, test of the neckline as a resistance, and a drop. There is upper line, there is lower line, there is this horizontal resistance, quite pretty wide, and the thing is that as long as we are below the neckline and below the horizontal resistance, the sentiment here is rather negative. Still. Now Australian dollar to American dollar. Also strong reversal. Also the price is trying to ignore this shooting star. What I like here is the downtrend line. That's the one. That's another one. This first main one was already broken. The second one is being challenged right now and is legitimate because we could see a stop here. That may be a start of the bigger reversal. So what we are having here, that's the neckline of the double bottom formation. And it looks like the bad times for this instrument are gone. And from this point we should see a stronger upswing. What I would love to see here is the price getting to the 23.6, then a bounce a little bit, then eventually break this level and aim for 38.2, because that would create inverse head and shoulder pattern, or maybe even more technical tests here and here. Obviously the point in time where it's going to happen is not relevant. It's only about the principle. So the breakout, bounce from the 38.2, test of the downtrend line as a support, and then upswing. We will see where it will go. Canadian dollar, Swiss franc. Sideways trend, pretty boring sideways trend. Nothing is happening here. Canadian dollar to Japanese yen. Nothing is happening here too. Swiss franc to Japanese yen. Downswing correction, most probably a downswing. That is interesting. So the price has pretty strong trends. I remember trading this double top formation here, but the price reversed, and now we are back again on the lower levels. Is this horizontal support or resistance still respected? Kind of. Setup is interesting here only on the weekly chart. The breakout of this red line, definitely strong buy signal. Breakout of this red line, definitely strong sell signal. But for the results, we have to wait. We still have to wait. But let's keep this instrument on the charts. Why not? Euro to Australian dollar is the next. Seems like a start of the bearish correction. Seems like we're challenging the uptrend line. Look, the similarity. Here, uptrend line. Here, uptrend line. Also, on Euro to New Zealand dollar, what we got is a rectangle here. On Euro to Australian dollar, it was more of a pennant. The lower line of the pennant was already broken, so on Euro to Australian dollar, we already have a sell signal. Euro to Canadian dollar. Sideways trend, nothing interesting, unfortunately. Euro to Swiss franc. Head and shoulder formation, comeback, reversal, smaller head and shoulder formation. So we're moving from the head and shoulder formation, left shoulder, head and right shoulder, to the inverse head and shoulder formation here. Everything is connected with this neckline. There is this neckline, but price closing a day above the blue line will be a signal to buy. This is my outlook on the Euro to Swiss franc. Also, in addition to this, it will be considered by some people by the wedge, right? So upswing, wedge, upswing. Euro to British pound. This, sell limit. No, I don't want this sell limit order. You need to be careful, right? Luckily, it's a demo account. And Euro to British pound. As you can see, strong reversal here. Downswing, correction, downswing, correction, downswing. So on Euro to British pound in 2 days, we managed to reverse movements from 1, 2, 3, 4, 5, 6, 7, 8, 9 days. That tells us a lot in which place we are here. on a weekly chart. What is this pattern? This is engulfing. This is bearish engulfing, which is promoting a further drop. And on the daily chart, we can see kind of a support here. The price should aim this support here. So euro to British pound, sell signal. Maybe not now because we are above the support. So maybe we'll have a bounce, but later we eventually should see the breakout. Euro to Japanese yen. Let's see this. That's quite important resistance. Downswing correction, most probably a downswing, right? But on a daily chart it's not so clear. So I'm gonna stay away from this pattern. Euro to ruble, just from the curiosity. Euro is getting stronger recently, but no biggie. British pound to Australian dollar. Downswing correction, most probably a further downswing. In addition to this, this correction is pretty technical. This is a wedge. A breakout of the lower line of the wedge will bring us a strong sell signal on the British pound to Australian dollar. British pound to Canadian dollar. Horizontal support. No. I'm not interested in this setup. British pound to Swiss franc. Also, I'm not interested in that. British pound Japanese yen. Here we do have this inverse head and shoulder formation. Left shoulder head and the right shoulder. We are about to break the downtrend line. There is this neckline, or we can consider this as a neckline. Price getting there will be a buy signal. Yes, it looks like this. British pound to New Zealand dollar. I like this one. Quick reminder. 38.2 got rejected, right? That's the first one. Horizontal resistance got rejected as a support. That can be considered as a false breakout. In addition to that, a double top formation. And the thing is that in this case, the price breaking the lower red line will be a strong sell signal. So here, price getting there will be a really nice sell signal. And I'm looking forward for this. British pound, Singaporean dollar. So I guess today we will do the currencies. Tomorrow we will focus on the commodities. I don't know if we will manage to do everything today. British pound to American dollar. Not interested in that. New Zealand dollar to Canadian dollar. So this setup is really nice because this shows us inverse head and shoulder formation. Left shoulder head and the right shoulder. Horizontal resistance, resistance, broken resistance becomes support. That's a clean setup. Here can be an important resistance, why not? Here also there is important resistance, so there is 38.2 and 50 from one. 50 from one, 38.2 from another. Let's check if here we do have a Fibo. Not really, just here and here. But still those two Fibos that we have can be a good target for this upswing, and then we can see a reversal. New Zealand dollar to Swiss franc. Horizontal resistance. That can be a good occasion to sell. But that can be a tricky trade, so I'm not interested in this. So guys, let's finish here. The rest of the instruments we will analyze tomorrow. Let's do a quick recap here. So euro dollar, one of the best setups. Buy signal when the price will get to the checkpoint, to the green sign, right? Another one, euro to New Zealand dollar. Price breaking the upper line, that's a buy signal. Price breaking the lower line, that's a sell signal. WTI oil, price breaking the horizontal support, gave us a sell signal. Price breaking the 38.2 gave us a sell signal, so we do have a sell signal. The buy signal will be triggered when the price will come back above the red area and the green line. Australian dollar to Swiss franc, that's a good occasion to sell, but the bullish momentum is very high, so that's a bit too risky. Breakout of the red line will give us a sell signal. Australian dollar to New Zealand dollar, still negative sentiment. Australian dollar to American dollar, most probably a bullish breakout and the movement towards 38.2. Swiss franc, Japanese yen, waiting for the breakout of those two lower red lines. Euro to Australian dollar, already a breakout, so a sell signal. Euro to Swiss franc, breakout of the blue area will give us a buy signal. British pound to New Zealand dollar, breakout of the lower red line will give us a sell signal, and New Zealand dollar to Canadian dollar, price reaching this area and drawing a bearish reversal pattern can be a good occasion to go short. That was it. Thanks very much for watching the daily analytical report. If you want more trading occasions, our reviews on certain instruments, visit our Twitter account and our website alpari.news. All the best.